Hey everyone, how's it going? This is the post-market analysis for Wednesday, August 14th. This morning we were talking about how with the, kind of subpar or not, I shouldn't say subpar, the right basically as expected CPI report, we wouldn't really have enough juice for us to get beyond that MA50. And that's what happened today. We got to the MA50, we poked above it, and then we closed a little bit below it. So we basically closed at the MA50. MA50 is at 544.06, and we closed at 543.75, so about 30 cents away from that MA50. And that is going to act as a resistance. Maybe we'll bump into it again tomorrow, but from here, most likely we're going to head back down, not a huge amount, but the most likely scenario is the one that we've been pointing out all week and the week before, which is this wide range chop sideways for a while at least for another week or so, but potentially all the way up into the elections. So until we get clear direction in this market, it's going to be tough to find single option positions. And the only real way to make gains off of those single option positions is to be very judicious about the symbols that we go into and to take very short-term profits. 1 day, 2 day trades, maybe 3, 4 day trades. If it goes beyond that, then we will want to time stop ourselves out because it could take a very long time to just cycle back up and allow that to go into our favor. So it's either got to be a short time frame or a longer time frame, 3-4 weeks, but 3-4 weeks to make 10-20% is probably not ideal. If I can make 10-20% in a day or two, or 30-40-50% in a day or two, then that's not too bad. We can still make that work. So everything that we're seeing in the market right now is telling us that most likely we're going to chop sideways. There's no catalyst left. There's no known catalyst left. The reports are basically done. There's nothing really for us to look at after CPI. Yeah, consumer sentiment, jobless claims a little bit, unless they're just really terrible and show us that our economy is deteriorating, then that's not really going to do much to the market. Next week, we don't really have anything. I didn't really look, so let me just confirm that. Yeah, nothing really. And the big reports were that CPI. So we'll get another one in September, but by then it's time for our rate cut decision. So nothing really ahead of us for us to look at. And then we've also got earnings. So I did get a question on how do I find earnings, and I do have the paid version of FinViz, but you can do this with a non-paid version. Let me see. Let's do that. Let's do that. If I go to finviz.com and I do not log in, then we'll be able to see how to run that. I don't know why that's not loading. That's interesting. Maybe I'll just log out right here. Okay, so if I go to the non-paid version of FinViz, all I've got to do is go to the screener right here, and then I can go to earnings. And the only difference between at least from an earnings perspective, the only difference between FinViz and the paid version of FinViz is that you can't use the custom time range, and we really don't need that anyways. We're just really looking at the next week or this week. So if I say, hey, this week, what else do I have left? And I could say, that's about it. I could limit it by country, but that is the country of where it's headquartered, where their company is headquartered. So that doesn't necessarily tell us that it's not listed on a US exchange. So I like to keep that on any. And if you wanted to, you can limit it to S&P 500, but for now, we'll just look at everything. Right? And then we'll just say this week, and then I can go over here to financial in order to see the earnings date and the market cap. And we can see right here we had Walmart, HD, Cisco. Walmart is reporting tomorrow morning. And then I can sort it by when it's reporting, so we know what else is left. So basically anything that is the 15th before market would technically we would want to trade that today. So we're really looking at anything that's the 15th after market and anything on the 16th. So AMAT, that's fairly significant, happening tomorrow after market. We've got that's about it. That's about it for the rest of this week. And then if we will go to next week, we have Intuit, we have Lowe's, TJ Maxx, Palo Alto Networks. So we have a couple of somewhat significant institutions that are reporting next week. But for the most part, the bulk of those earnings are behind us. And at this point, almost no S&P 500 ones left. So if I do S&P 500, if I do this week, all of these, except for AMAT, have already announced their earnings. And then next week, there's only a small handful. So there's not really all that many left. If I say, how about next month? Do they give me next month? They don't give me next month. Okay, so really, there's not that many earnings for us to look at, or to act as catalysts to move this market one way or the other. So we really are just chopping sideways. We're going to expect that we chop sideways. If we get a surprise and we break out of that MA50, or we trade back down and break below this VWAP right here, or that MA200, then we'll reconsider and we'll start getting directional. But until then, we want to maintain neutrality inside of our portfolios and just expect that we're going to chop sideways, take positions where we're only in for just a couple of days. We don't want to go too long term over here. We might still be able to find something that's trending very nicely, but it'll be, don't be surprised if it's a very slow grind. So in this environment, we might want to just stick to those 1 to 3 day, 5 day trades where we can pick up some quick 20, 30 to 50% winners. We're not going to expect huge gains. We're not going to chase after the 80%, 100%, 150%, 200% gains that generally would take at least a week to 2 weeks in order to develop. So let's see where the action was. Let's take a look at our VIX, see how far down it came today. And we traded all the way down to 16.2, so getting kind of close to that 15 area. But once again, once we get below that 15, then our volatility is more muted. It's going to be more difficult for us to break out of a range. If we go very low VIX, then we could grind up slowly to all-time highs, but it just doesn't, this market just doesn't feel like it. It just feels like it needs another pullback. And if it doesn't bounce back up, then we're looking at maybe potentially making a double bottom. Then we're looking at something that looks more like a downtrend. And if we look at QQQ, it's not looking as positive as that S&P 500. It's good that it came above this EMA 20, but that low is still below that EMA 20. I didn't get a complete bar above it, and we do have a red bar, so this is in no way, shape, or form a confirmation of a break above the EMA 20, and this is looking even more bearish than the S&P 500. I wouldn't be super bearish on the QQQ just yet, but I just would be skeptical of an upward movement. So once again, neutral on the QQQ. So TLT, let's take a look. TLT bonds starting to move back upwards. Now it is probably in anticipation of rate cuts and not so much fears of recession, because this was panic. This is less so. This is just, hey, we still think that our chances of getting a rate cut in September are still high. I don't know. So let me share with you guys something that I received from another guy that I really respect and actually may soon be colleagues with. He sent me a report that he scraped off of, I think he scraped off of Twitter, but let me just see. And I think he might have pieced it together from a few different places. But let's take a look at this. Price changes over last July CPI report. So that's the one that we just got. CPI reporting in August, but it's July. So this is year on year. Transportation is up 8.8%. So transportation costs 8.8% more than it did last year. Shelter costs 5.1% more than it did last year. Electricity, 4.9%. Food away from home, if you're eating out, 4.1%. Medical care, 3.3. Overall CPI, 2.9. That's the number that we saw in the report this morning. CPI, 2.9. Okay, so things are more expensive than last year. That's what we expect from inflation. Is just that the Fed targets 2%. So that this 2% is a combination of everything. But look at these things. The transportation up 8.8%. If you have to go to work, if you have to go to school, it's costing you 8.8% more than before. Your utilities, 1.5%, food at home, 1.1%. Fuel is down a tiny percent, 0.3%, and new cars and gasoline, and then used cars down 10.9%. So what this is telling me is that the majority of this overall CPI number, what allowed it to come down really is just this used car number. And people aren't buying used cars all the time. It really shouldn't be. We can't really look at this CPI number and say on a day-to-day basis or on a month-to-month basis, the cost, the things that are coming out of my pocket, is it really only up 2.9%? What if I never bought a used car? If I didn't buy a used car and I didn't buy a new car, if I didn't buy a car this last month, is everything net up or net down? Is it up over 2.9%? Well, let's take a look at this. Food at home is up only 1.1%, and my utilities 1.5%. But everything else, my medical care, if I have to eat out, my electricity, my rent, my transportation, all of that is up a significant amount. So can we really say that CPI or that inflation is down, that the average person in America is really feeling an improvement in the inflation situation? The answer is no. And given that, should we be cutting rates in September? The answer is no. And will the Fed cut in September? My answer is still no. We'll see what these guys think. So this morning we're at 58.41.5. Let's see if that updated. Yeah. So now there's less belief that we will get a 50% rate cut. So what that means is we're just a tiny little bit more rational than we were earlier this morning, but we're still expecting a 100% chance of a rate cut in September. And anytime someone says we've got 100% conviction, red flag should be going off. I never tell you 100% that this is not going to happen. I just tell you, hey, I've got 80 to 90%, 95% conviction that we're not getting a rate cut. I can't say 100%, guarantee you 100% that it's not going to happen. But this market so far is pricing in 100% that we are getting a rate cut. And that means we are setting us up for a potential huge correction in the market if we don't get that in September. So we'll see. We'll see if we actually get it or not. But right now, that's what is priced into the market, and that's why this is moving higher. So really, I just want to look at momentum levels. I already know that we're still below that MA50, and I'm just going to expect things to chop sideways and remain neutral. But I just want to see if anything is shifting, and if that changes my possibilities and the percentages, the probabilities of what might happen. So we're going to take a look over here at our bar chart to look at our momentum. I'll look at the overall market first, everything above $2, and has been traded for at least 6 months. So we got 47.5, 53, So not super close to danger zone. We were basically at 50% a few days ago. And actually last week we were below. We were below completely. But that was very brief. That was only for a day or two. If it stays down there, then this market is in trouble. So let's take a look over here. Our NASDAQ 4556, looking very much like that overall market. There's this depressed downward pressure that just hasn't quite hit the 200-day moving average yet. But the longer this stays, the more pressure it puts over here. Dow Jones 6057, looking very healthy. Russell looking very similar to the NASDAQ. S&P 500 6068, that's looking pretty healthy as well, but we do have sectors not looking good. Consumers discretionary still not looking good. Energy recovered a little bit from a day or two ago where we had this number below 50, but again, very much on the cusp. And then tech split, very huge difference over here. And then materials, XLB. Let's take a look at those three. I know we took a look at it, it was either yesterday or the day before, but let's take a look again just to see what the market looks like today. Discretionary, energy, tech, materials. Okay, so creeped up, but hitting a lot of resistance here. So this is looking worse than QQQ. Even XLK is looking a little bit better than materials at the moment, but this is still very much a downtrend. And XLB is not as obvious that this is a downtrend. This looks like a few days of sell-off, then sideways movement, slowly creeping up, but this really mostly sideways movement. If I look at this bigger range, it still looks like sideways movement. So I would actually take my earlier statement back and say XLK is looking worse than XLB. Let's look at XLY. XLY not looking good at all, even worse than XLK. So if I'm looking for shorts, I'm definitely looking in XLY at the moment. And then we had energies. Energies chopping sideways, just like XLB. So what can we do? Let's take a look. I don't remember what trades we put into option strat. What did we do? Oh, we did a Costco and a JBL, a long short pair. So oh no, we didn't. Costco, this must be my own thing. We just did JBL, CPI tail risk trade. Okay, and we made 8.7% on it, not bad. Let's see how JBL is looking. Okay, it looks like it could come down even more, but this is really just a play on the CPI, so we could just take our profits right here, or we can see if that breaks down further, if it breaks below the EMA 8 tomorrow and continues trading down. So it just depends on your portfolio, what you would do if you just want to take that 8.7%, or do you want to see if we can get a little bit more and stop yourself out above that EMA 20. So I'll just keep it on for now. Excuse me. And then if I wanted to look for a short now, why would I look for a short right now? Because my expectation is that we're going to stay within this range, the MA50 and the MA200. And now that I'm at the MA50, then my expectation should be that it should start coming downwards. So I should be looking for a short at this point in time and not a long. So let's take a look at that. Oh, before we do that, let's do 90-day highs. 150, 90-day lows. Still 100 in the 100s on those highs. A little bit better than the situation earlier this morning. We had 118, I believe it was. So a tiny bit better, not significant. So I really would want to see those numbers in the 2s and 3s and then 4 just continuing to move upwards if I'm going to believe that there's continued upward momentum. But we'll see what tomorrow brings, because we are at that MA50, and if we're going to break through, then it should be tomorrow. Otherwise, we're just chopping sideways or moving back down. So let's take a look, see if we can find a nice little short right here. So example short. Lulu, not looking very good at all. Ulta, very weak. BBWI, very weak. I like these two better than Lulu. I don't know if I even need to look any further. Etsy, doing very poorly. Let's take a look at Etsy, Ulta, and BBWI. Okay, that moved a little too much today. It would have been better yesterday, obviously. Hindsight. But so let's take a look at Ulta. Ulta is looking pretty good, hugging that EMA 8. And earnings a couple weeks out. And then BBWI. BBWI looking like it's getting caught in this dealer concentration, chopping sideways, but that could be gone by this Friday with options expiration. So I would avoid BBWI for now for that reason, that chop sideways. Or just wait for Monday because then the options have already expired, and that'll break this free, allow it to move. So I'm going to add BBWI to a watch list, actually. And let's take a look at Ulta Beauty. Ulta Beauty looked like it could have been caught in there too, but it popped up. So yesterday's movement gives us a little bit more confidence. Let's take a quick look. That reminds me to look at the volume. Yeah, volume still low. So unless we break through with conviction and volume, we're just more likely that we're going to chop sideways. Go back to Ulta. Sorry to pop around like that. I didn't want to forget to look at that volume. Ulta Beauty, we can run. Let's see what our dealer concentrations look like. Let's take a quick look at ELF also. They're related. Elf Beauty. Yeah, Elf Beauty not looking great at all either, but it already had a very sharp movement earlier this week. Okay, I've got negative exposure. That's good news. And look at this, plenty of room to the downside. This is looking, actually, I really like this. This is looking very, very good. Okay, so we've got this at 335. We do have a lot expiring on Friday though. And it's all pretty much that lower. Yeah, it's tough. It's tough to trade so close to options expiration, but I like it enough that I would try this at baby size. So why not? Let's go into our single option strategy for a put into September, which would be about 30 something days. Normally I like to give it, yeah. Since we're not planning on being in this a really long time, so rather than going all the way out to October, we will go to September. And at the money put is probably appropriate for 105. This is the wrong ticker symbol. Okay, 330. Is there something going on in Ulta? Oh, it really moved. It really moved after hours. That's interesting. Okay, so that takes it off the table. And let's see if there's some news related to it. Okay, so it looks like maybe Buffett bought Ulta Beauty. Interesting. And after hours, that's setting it up to 375. That's crazy. All the way up to the MA50. This is going to make a beautiful gap trade. Not today, but maybe in a week from now or so. This could be a really interesting gap trade. Okay, so no trade for today. We'll wait for options expiration. We'll take a look at this. And I'm going to add this to my watch list for a potential gap trade. Okay, so really we're just chopping sideways. We'll see what develops. But for now, we're very neutral, and we're going to expect that most likely we're going to come back down into range. But tomorrow, if it does break this MA50, and then with conviction and with momentum, with volume, then we'll expect to see 555, and then we'll see if it can do the same thing, conviction and momentum, breaking that 555 level. But for now, our expectation is that everything is going to remain neutral, and that will probably move back down into range. That's it for today. Have a wonderful rest of your day, and I will see you tomorrow morning.